Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026, June 22nd, and the market has decided to serve us a tasting menu: cooling SpaceX hype, leveraged AI chasing, Europe trying to look attractive again, and Treasuries getting nervous about inflation.
So basically, investors woke up, opened their apps, and found a buffet where every dish says, may contain volatility. I love finance because even the appetizers come with a risk disclosure.
Story 1. CNBC reports SpaceX stock dropped again after a rally following its record-breaking IPO on June 12th. The key point is not that a hot stock fell, it is that the post-IPO excitement cooled for the past 2 full trading days.
A record-breaking IPO followed by a sell-off is like buying concert tickets because everyone is screaming, then realizing you are in the parking lot, the band already played, and the resale fees have formed their own economy.
Exactly, though I would not dismiss the company just because the stock pulled back. For normal investors, the lesson is position sizing. If you buy a newly public company after a massive rally, treat it like a satellite launch, not a savings account.
Story 2 takes that satellite and adds a caffeine drip. The South China Morning Post says some South Korean retail investors are using Hong Kong-based platforms and leveraged products to chase the AI and semiconductor boom, with analysts pointing to FOMO, currency advantages, easier access, and regulatory arbitrage.
The simple version: leverage is borrowing a louder microphone for your portfolio. If your song is good, everyone hears it. If you hit a wrong note, the whole neighborhood files a complaint.
I disagree a little. If the AI and chip cycle is really that strong, maybe using Hong Kong access is smart, not reckless. Investors are not all cartoon raccoons pushing a big red leverage button.
Fair pushback. Access can be smart, but leverage changes the math. A good theme can still be a bad trade if the entry price, borrowing cost, and downside risk turn your investment thesis into a treadmill with invoices.
Story 3. Bloomberg says the Buy Europe trade is returning as stagflation fears ease. Investors are betting that inflation can cool while growth improves, which is basically Europe walking into the market and saying, yes, I have been working on myself.
That matters because many portfolios have been crowded into U.S. growth and AI-related winners. If Europe's inflation picture improves and earnings stabilize, global diversification stops sounding like broccoli and starts acting like actual protection.
Story 4 is the bond market doing its dramatic weather report. Bloomberg says Treasuries declined after President Donald Trump again threatened military action against Iran over Hezbollah's attacks on Israel, prompting investors to reassess inflation risks.
When Treasuries fall, yields rise, and the signal is simple: investors are demanding more compensation for risk. If geopolitical tension threatens energy routes or oil prices, inflation expectations can move, and that affects mortgages, loans, bond funds, and retirement portfolios.
Final story. Chipmaking tool firm Nearfield Instruments raised $380 million at a $1.6 billion valuation, according to Channel News Asia. That is private capital saying, we may argue about AI valuations, but someone still has to build the tools that make the chips.
That is the picks and shovels angle. Instead of betting only on which AI app wins, investors watch the infrastructure layer: chip equipment, testing, materials, power, and supply chains. It is less glamorous than a chatbot, but glamour has never paid a dividend by itself.
So the recap is, do not chase IPO rockets without a parachute. Do not use leverage just because your group chat discovered semiconductors. Do not ignore Europe, and do not pretend bonds are boring when they are clearly hosting a geopolitical podcast of their own.
Action checklist for today: review any single stock concentration, check whether leveraged products fit your actual risk tolerance, confirm your bond duration exposure, and ask whether your portfolio has global balance. If this helped, subscribe to BD Daily Finance News Podcast, like the episode, and tell us in the comments: are you buying the Europe rebound or waiting for clearer data.